meaningful achievement lies a quiet, often boring process of showing up repeatedly and doing small things well. The psychology of consistency is rooted in how the human brain forms habits, interprets progress, responds to reward, and builds identity over time. Small wins may appear insignificant in isolation, but when compounded through consistent action, they create results that seem extraordinary to outside observers. The truth is that big results are rarely the product of one heroic effort. They are the accumulation of thousands of small, deliberate actions taken even when motivation is low, emotions fluctuate, and external validation is absent. At its core, consistency works because the brain is designed to adapt to repeated behavior. Every action we take strengthens certain neural pathways. When a behavior is repeated often enough, the brain begins to automate it, reducing the amount of conscious effort required. This is why habits feel easy over time. In the beginning, consistency feels difficult because the brain is resisting change. It prefers familiar patterns, even if they are unproductive. When someone decides to wake up earlier, practice a skill daily, trade with discipline, or create content regularly, the brain initially interprets this as a threat to its comfort. Psychological resistance appears in the form of procrastination, self-doubt, boredom, or rational excuses. However, when the action is repeated consistently, the brain slowly accepts the new behavior as normal. What once required effort becomes part of identity. This shift is one of the most powerful outcomes of consistency. Small wins play a critical psychological role in sustaining consistent behavior. Humans are wired to seek rewards. When a task feels endless and the reward seems far away, motivation declines. Small wins act as immediate feedback that effort is producing progress. Even tiny improvements signal to the brain that the behavior is worthwhile. This releases dopamine, a neurotransmitter associated with motivation and learning. Contrary to popular belief, dopamine is not only released when a big goal is achieved, it is released when progress is recognized. By breaking large goals into smaller, achievable actions, consistency becomes psychologically sustainable. Each small win reinforces the behavior and increases the likelihood of repetition. One of the biggest mistakes people make is waiting for motivation before acting. Motivation is emotional, inconsistent, and influenced by mood, energy levels, and external circumstances. Consistency, on the other hand, is behavioral. It does not depend on how one feels in the moment. Psychologically, people who achieve long-term results rely more on systems than emotions. They commit to a process rather than chasing motivation. Small, consistent actions lower the emotional barrier to starting. It is much easier to commit to 10 minutes a day than to promise perfection or massive effort. Once action begins, momentum often follows. This is why consistency often precedes motivation rather than the other way around. Another psychological aspect of consistency is identity formation. Every repeated action sends a message to the brain about who you are. When someone writes daily, even in small amounts, the brain begins to accept the identity of a writer. When someone follows a trading plan consistently, they start seeing themselves as a disciplined trader. Identity is powerful because humans naturally act in. But here is the uncomfortable truth most traders avoid. Open quote, "Big results in trading do not come from big wins. They come from consistent behavior repeated over time." Close quote. Consistency is boring. Consistency is quiet. Consistency does not feel exciting. And that is exactly why most traders never master it. This essay will explore the psychology behind consistency, why the human brain resists it, how small wins compound into massive results, and why the traders who survive long-term are not the most talented, but the most consistent. Chapter 1. The brain is not wired for consistency. The human brain evolved for survival, not trading. Thousands of years ago, the brain was rewarded for fast reactions, big risks, immediate rewards. In modern markets, this wiring becomes a liability. Dopamine versus discipline. Every time you win a trade, catch a big move, take a risky entry that works, your brain releases dopamine. Dopamine doesn't reward good decisions, it rewards exciting outcomes. This creates a dangerous loop. You associate excitement with success, you associate boredom with failure. But consistency lives in boredom, following rules, waiting for setups, accepting small profits, stopping after losses. The brain hates this. Chapter 2. Why traders chase big wins and lose. Most traders don't blow accounts because they lack knowledge. They blow accounts because they're emotionally addicted to big wins. The fantasy trap. The fantasy sounds like this. If I can just catch one big move, this trade can change everything. I'll be disciplined after this win. This mindset creates over-leverage, overconfidence, overtrading. Ironically, the desire for big results destroys the ability to get them. The paradox of success. The traders who aim for consistency get big results, lose consistency. This is the paradox most never understand. Chapter 3. Small wins. Rewire the brain. Consistency is not just a strategy, it is neuropsychology, how small wins change behavior. A small win, following your rules, executing your plan, accepting a loss correctly, stopping for the day. These wins don't always involve money, but they do something powerful. They rewire your brain to associate discipline with reward. Over time, you crave correct execution, you trust your process, you detach from outcomes. This is how professionals are built. Chapter 4. The identity shift. From trader to professional. Consistency is not something you do. Consistency is something you become. Amateurs think in outcomes. How much can I make today? How fast can I grow this account? Professionals think in process. Did I follow my rules? Was my risk controlled? Was my execution clean? The shift from outcome thinking to process thinking is the true psychological transformation of a trader. Until this shift happens, discipline feels forced, losses feel personal, trading feels emotional. After this shift, discipline feels natural, losses feel expected, trading becomes calm. Chapter 5. Consistency is built through repetition, not motivation. Motivation is unreliable. Some days you feel focused, some feel emotional, some days you feel impatient. Consistency does not depend on how you feel, it depends on systems and habits. The myth of motivation. Most traders wait to feel confident, feel ready, feel disciplined. Professionals act regardless of feeling. Consistency is built when you trade the same way on good days and bad days, you follow rules even after losses, you stop even when you want more. Chapter 6. Why losses are essential to consistency. Losses are not obstacles to consistency. They are the training ground. A trader who cannot accept small losses will never achieve consistent results. The psychological test of losses test. Ego, patience, emotional control, risk discipline. Most traders fail this test by revenge trading, increasing lot size, breaking rules. Consistent traders pass the test by accepting losses quickly, staying emotionally neutral, continuing to execute the plan. This is not talent. This is conditioning. Chapter 7. The power of boring trading. Boring trading is profitable trading. This is one of the hardest truths to accept. Why boring feels wrong. Boring feels like missing opportunities, not doing enough, falling behind. But boring actually means no overtrading, no emotional decisions, no unnecessary risk. The market does not reward excitement, it rewards patience. Chapter 8. Consistency. Compounds invisibly. One of the most dangerous psychological trend trading is impatience with progress. Consistency compounds quietly. You won't notice it daily, you won't feel it weekly, but over months, mistakes reduce, confidence stabilizes, equity curves smooth. This is why most traders quit too early. They stop right before consistency begins to show results. Chapter 9. The difference between confidence and consistency. Confidence without consistency is arrogance. Consistency creates real confidence. Real confidence comes from knowing you will follow rules, trusting your risk management, accepting uncertainty calmly. This confidence cannot be faked. It can only be earned through repetition. Chapter 10. The mental cost of inconsistency. Inconsistency is exhausting. Emotional swings, self-doubt, frustration, confusion. Consistency brings clarity, calm, stability, self-trust. The psychological relief of consistency is often more valuable than the money itself. Chapter 11. Why most traders never become consistent. Most traders fail to achieve consistency because they change strategies too often, chase new indicators, avoid accountability, refuse to journal, seek shortcuts. Consistency requires delayed gratification, emotional maturity, long-term thinking. These qualities are rare. Chapter 12. Building a consistent trading mindset. Consistency is built through simple principles. 1. Risk small enough to stay calm. 2. Focus on execution, not profit. 3. Accept losses as business costs. 4. Stop trading when rules are broken. 5. Measure success by discipline. These principles sound simple. They are psychologically difficult. Chapter 13. Small wins outside trading. Matter 2. Consistency in trading reflects consistency in life. Sleep habits, routine, patience, self-control. Chaotic lives create chaotic trading. Structured lives create structured results. Chapter 14. The long game nobody wants to play. Trading rewards those who think in years, not days. Build skill slowly, respect probability, stay humble. This long game is unattractive to most, but it is where real success lives. Chapter 15. The quiet power of trusting the process. At the highest level, consistency becomes effortless.